Okay, hello everyone, and welcome to this weekly trading roadmap, where, as always, we're going to cover the main events, event-driven risks that we call them, for this week, and then cover the risk and money management plan for this week ahead. So, just start off very, very quickly. Monday, with the European industrial production and the ECB's Galau speaking. Overall, very low relevance. I'm giving myself a 10% risk allocation. Let me just change the color of this, make it a little bit easier to see. Tuesday, we've got the European employment figures. Then the main figure, or at least data point, I'd say, for this week is the US retail sales. Quite an important figure to keep an eye on. We've got the PPI core, the Empire, and the business inventory is also on Tuesday from the US. High relevance, and I'm giving myself a 20% risk allocation for that day. Main day of the week, we've got the UK ILO unemployment on Wednesday, and then we also have the US rate decision, so the FOMC rate decision on Wednesday. So, given that we've actually had some fairly decent figures in terms of CPI recently, core PCE and CPI actually ticking up, quite nicely the last figures we saw. So it seems almost as if now the Fed have to kind of make a decision. They've said they're data dependent, and the data is looking a little bit better. Oil's actually finding a bit of a bid now. Some of those global concerns are now abated slightly. So just wondering whether they might be a tad bit more hawkish than most people might think, or maybe even consider a rate hike at this meeting. Just considering the data that we've seen so far. Obviously, the Fed want to stay ahead of the curve. So I would say just stay very, very attentive, understand the market pricing, and understand how the Fed now have to contend with some pretty decent data points, and also an ECB that's just launched a pretty big bazooka that might abate some of that risk off fear that we've seen recently. So this is just quite an interesting meeting, I think, and one that could be very, very good to trade. We also have the US CPI that day. The housing starts, building permits, and industrial productions. Obviously, very high relevance, giving myself a 30% risk allocation for that day. On Thursday, we've got the Swiss National Bank depot rate decision. We've got the European CPI and the Bank of England depot rate. And then we also have the Philly Fed on Thursday. Overall, high relevance and a 20% risk allocation for that day. Moving over to Friday with the German PPI, US University of Michigan Consumer Confidence, the Fed's Dudley, Rosengren, and Bullard also speaking all on that day. So obviously, whatever comes of the FOMC rate decision, how the markets react, I'd stay tuned to what happens on Friday, because these speakers, if they see the market reaction and think then that the market reaction is not really what they were looking for, they might come out and kind of guide the market in whatever which way they want. So again, important to stay tuned to that. So let's move over to some of the markets. First of all, looking at the Bund futures, we're looking at a weekly profile, as you can see in here, quite a big profile. So I'm just opening it up to quite a big, scrunching it up a little bit more so we can see the whole thing. As you can see, on 2 weeks ago, we had quite a bearish close on the week. We tried breaking out, we failed, we closed quite lower. The market came up into previous resistance, didn't quite get up to the areas that we were kind of looking at in here, but we left pretty much a nice little selling tail last week at 163.40, which is the high of the week, right in there. Our value area high of last week is 163.20. Value low at 162.16. As you can see, last week we had quite a big protrusion of a move to the downside through these weekly lows. So we had these weekly lows in this little area in here, which we broke. We had a pretty big move to the downside, as you can see, after the ECB, which was this green day in here. We hit this weekly VPOC at 160.81, basically left it. This is the weekly low to the tick. And then we've closed back into this kind of value zone, as you can see in here. Now, on Monday, we've tried moving higher. We had a bit of a false breakdown and then move back up into this region, which was we had these weekly lows and the value area low at 162.16. We haven't been able to hold a bid in last week's value yet. So that's quite interesting to note. It seems like we're filling in value that we've left untraded from last week, and that's going to be quite important for the auctioning process. If we're looking to fill that in and hold below this value area low here, this weekly value area low here, that's giving me the indication potentially that we might actually would like to start rotating back down and potentially find a value zone somewhere in here, maybe somewhere to settle before we come into the Fed. Now remember, with the Fed, like we said before, there is a risk of them being more hawkish, so I would suspect that even if we find a bid in the Bund, we manage to find a bid in the Bund, get back into value and hold, potentially make our way back up to these 162.55s VPOC, and actually find a bid more back into last week's value, whatever the case may be. Because there's that tail risk of them being hawkish on Wednesday, I'd be very attentive around between 11 a.m. to about 2, 3 o'clock p.m. GMT, when the U.S. starts coming into trade. That's usually when we see these risk reward trades being put on, and because there is slightly a risk of them being more hawkish, potentially, you might see a bit of a sell-off in the T-notes, and that will probably drive the Bunds as well. So just keep an eye on it. Obviously, if we have the bullish context, it could reverse somewhat. That's something I'm going to be looking for. It doesn't necessarily mean it's going to happen, but I'm waiting, and I'm going to try and stay attentive and watch my ladder to see if there's any particular big offers or volume to the downside, and I'll try and play with that sometime later this week. So that's obviously very important to note. So that's currently our structure in the Bunds. As you can see, quite a big range. We mentioned very important is this pivot at 162.16s, which is our value area low, literally the last 2 weeks. So it's a very strong area, very important area to keep an eye on. Moving over to the Euro stocks, you could see, we'll just move this over. The Euro stocks also had a pretty wild week last week, obviously with the ECB, the market. You could see this green range over here. Basically, that one day is the whole range of last week. The high being 31.30 and the low, if you just bear with me, I'm just going to draw that one in. Move these 46s. This is our low at 35s, so 29.35s. So this is our range overall from last week. As you can see, pretty big range. Our VPOC from last week, our highest volume traded price is 30.18. Value area high of last week at 30.57 and value area low at 29.72. As we are now, we've now opened outside of balance. So this is outside of balance. Now, because we're outside of balance, I wouldn't be surprised if we came and tested that balance. This is going to be our critical area. You can see that's also ahead of that weekly high. Super important area for me, these 57s. If we can hold this area, for me, we are bullish. If we can't hold this area and we find an offer below here, I'm looking for a move back down into these 30.18s, potentially even back down to the value area low of last week at 29.72. But overall, as you can see, the context now, we seem to be looking to fill some value. You can see we've got not a lot traded in here that probably needs to be filled. We're doing some work right now. I'd suspect that this is a region the market might want to fill a little bit more before we can actually start making a move to the upside. Now, if we do break to the upside above those 31.30s, as you can see, that'll be above this weekly high and above even this little weekly low area in here. Really, we're starting to venture back into this kind of traded area. As you can see in here, this traded area, really looking at this weekly low area in here where the volume starts tapering off just in there, 31.80s, weekly low. I like this area. It just seems like a nice little area potentially for the market to stall. Again, if it doesn't, we do have some areas just above there, value area low just above here, and some single prints with a weekly VPOC here. So really this region in here is looking interesting. Obviously quite a big region, so when there's such a big area and you don't really have one single level to pay attention to, I'm more looking at the price action over the whole area. So, we could come up here, maybe find a bit of an offer, maybe break, come back in here, maybe make a bit of a head and shoulders pattern or something that I can lean on for a move back down. If not, and we're actually looking, that's a scenario, obviously. The scenario is that we can find a top here. If not, and we come in here and start building value and just ranging, then I'd potentially be looking for a move back up into this region. You can see we've got a gap all the way from this level in here up to these 32.43s, which I think this area is quite interesting. But the more interesting area, as you guys can see, is that closing gap, which if I just remove one of these erroneous levels, I can just fill that in. It's around 32.72, or just under actually, 32.71 actually. So this 31.71 for me looks pretty interesting. An area I'd be looking to trade. We've got a closing gap, so the close on that week. We've got a 50% and IB low, bit of volume just above here. So I think this area is interesting for me. If we come into this area, I think this whole area is an interesting area to keep an eye on for potential offer. Even if we fill this gap in, I'm looking for a move back up here. If it's sharp, I'd be looking for a move back down to fill in this area and range, because it seems like we've left quite a bit of a void and cave there. That is obviously our scenario to the upside in the stocks. Like I said, to the downside, if we get back into value, we're looking at 29.72. Below there, obviously, we've got the weekly low at 29.35. And then we're looking more back into these regions. If we do get back below this low and start trading, especially below these into this value, then potentially we're looking at a move maybe even back down to these 28.61s, which is, you could see a pretty important little pivot. Value area low in here, weekly low in there. All in all, quite an important region. So if we do breach this area and we start building value in this area, then I'm looking potentially for a move back down to these 28.61s. And that's just purely from an auction theory and market structure perspective. Right, so those are the two main markets that I generally look at. If we look at just a few little structures I want to take a look at in terms of, if we go back to the bonds real quick, just looking over at my Reuters, and I could see my yield chart on the weekly for the bunds. You can see we've actually closed higher in yield, obviously from what we've seen in price. It seems as if we're building a bit of value in this region. We've built like this whole area in here now. We've got a bit of a selling tail there, a bit of a buying tail in there, and it seems like we're ranging in here. Really, we want to see some sort of confirmation on either side. The trend overall, as you can see, medium term is to the downside in yield, so I don't want to be fighting that too much. But if there is a case to be made for an upside move in yield, well then really any sort of cap in yield would probably be at these 42.4 basis point mark. You can see very strong support and resistance, as you can see right in there. Below, obviously, lower end of yield is that 4.9 basis point mark. In terms of what we saw last week as well, the short end of the curve, 2-year, had a very large move to the upside. Obviously, that's partly due to the fact that Draghi suggested that we've hit the lower bound in rates. And because he suggested that, you could see the 2 years actually underperformed significantly in price terms and in yield terms actually outperformed. But this is how we're currently structured. We've come up into this resistance area in here. As you can see, find a bit of resistance in yield just in there. But overall, short end of the curve seems to be underperforming in price. Something I'm just keeping an eye on this week. Looking over at the FX markets, just want to take a quick look at what we've got this week. Looking at the euro, after last week's decision out of the ECB, the big bazooka, we've actually seen the euro move higher. So we've had euro strength, which is interesting. Now we're looking at this potentially big, well, at least I am looking at this big triangular pattern here. You can see very firm resistance in these areas, very firm support in these areas. Big triangular pattern. In overall terms, obviously the whole trend is to the downside. So I'd be careful unless we break this area in here and then make a move to the upside. I'd really be careful getting too bullish, the Euro USD. However, this price action does obviously and should give everyone some doubts about the overall weakness of this product, because after such a big move, if the euro is willing to move higher, that could give us a big sign. But like I said, to get confirmation of that, we'd have to see a break of this, a hold above these areas, and then potentially a test back into these resistance areas to the upside. So that's how we're currently looking at the Euro USD. In terms of the yen, we actually have the BOJ this week. I need to double check what day that is. I think it's midweek. But the BOJ is actually, their decision this week, I actually forgot to put that in the Venture and Risk Roadmap, but do keep an eye on that. We have currently a nice structure building on the weekly, as you can see, double bottom, bit of a formation in here with resistance trend line in there. We've had the impetus to the downside, so JPY strength. This is implying JPY strength, as this is the US dollar JPY pair. So as we've got some pretty decent coiling in this market, in this whole region here. Any break of this structure, and I'm preferring the break to the downside because you can see we've got this pretty distinct topping pattern right now. Any break to the downside, I think, could give us some decent impetus for a much larger move to the downside. But like always, when the dollar yen, when there is yen strength, I would say this play would work a lot better if there's a risk-off theme in the market. Generally, these moves that we saw to the downside in this pair were when we saw a lot of risk-off and volatility in the market. So, the better move to the downside is going to come when it's accompanied by risk-off themes. So just be careful. Watch the momentum as it breaks, if it breaks to the downside. If there's risk-on themes and we get a break to the upside for whatever reason, then potentially better off playing that to play with the momentum. In terms of some other structures, I want to point out the Aussie dollar, which has been very strong. Obviously, iron ore prices have been shooting up ridiculously. I think with some 20%, in recent weeks. So be very cautious of this. Obviously, the commodity sector, which we'll take a look in a second, the commodity markets are very strong, or at least a lot stronger than they used to be over the last year. And because of that, the commodity currencies are finding a bid. Not only the Aussie dollar, but the CAD as well is very strong. The Aussie dollar seeming very, very strong, came into some very, very decent resistance last week. So I'd keep an eye on it. This whole area, 755, up until here, which is about the 0.76 level. It seems to have found a bit of resistance. If we can find some resistance there, potentially we might look at a move back down to test some of these highs. So I just want to point that out because we're in a very critical region. A break through this area with some decent impetus. Potentially, if we start holding these areas as support, that could give us a move much higher into this value area zone, as you can see there. Also, the CAD, as you can see, again, this is the dollar CAD. So this move to the downside, as we're seeing, is CAD strength. Very, very strong CAD at the minute. We've had a bit of a move up. You can see we've been kind of holding this trend line all along. We've had a big euphoric move to the upside. We've now come off quite a bit. If we can break this area here and actually start holding below this trend line and below this little resistance area here at 1.3263, well then potentially we might see a move, back down to these 128.33s. If we cannot hold this area and we start finding a bit of a bid here in the dollar, at least, because the dollar seems to be quite weak recently, then potentially we might see just a little bit of a move back up, maybe into these resistance areas, as you can see here. Right, so that's for the FX markets. Really quickly looking at the commodities, because that is, just overall the commodity complex is looking quite strong. Gold, as you can see, on a weekly time frame, had coiled, had broken this very big falling wedge pattern. Something we've been really discussing since the beginning of the year. For those of you that do follow these weekly roadmaps and my market wraps, we've been talking about this pattern. We broke it. We saw a very big swoosh to the upside, a bit of coiling. We've now broken that. We've left more or less an inside week. We've all taken it out by very little, but we're pretty much in last week's range. So any break of this, I think, is going to be quite important. This is obviously my pivot. These 1239s I see as a pretty decent little pivot. Even going back, you can see it's been decent support and resistance. It's now the low of last week as well. A break up to the upside, I think we should be looking to target these 1303s. A break of this pivot to the downside potentially might take us back to that really key support region in here at 1193 to 1189. So that's how I'm seeing gold, at least for this week. If we look over at oil, oil's been very, very strong. Again, very similar structure we've been talking about again since the beginning of the year is this falling wedge pattern. We had that false break to the downside, double bottomed. We come back into the structure, vacuumed our way back to the other side, broken it. We've seen a move back up, which we were expecting. We've been talking about if we get back into here, we should be expecting a move back up to these 38, 39s. Now we're seeming to hold a little bit of a resistance here. I'd suspect if we can't really find an aggressive bid through here, our next area for the bulls that they really want to hold is this region here, this very, very, very critical 34.82 level, that double top that we broke, and pretty much a retest of this falling wedge pattern. If we can hold in there, then guys, we might be building a pretty big inverse head and shoulders, in which case the neckline is here very clearly, a break of that to the upside, and we might see some very decent upside moves in oil. Really about $12 worth of a move, which should take us potentially back up to this 50 region. So just keep an eye on this structure. At the minute, it's developing. We're talking about it now a little bit prematurely, but we've been looking at the way this oil's been moving, and we've been kind of discussing it since the beginning of the year, more or less playing out the way we've kind of been looking at it and understanding its price action. Obviously, all those bets are going to be off the table once we take out these 38.82s, and the buyers are not as aggressive in trying to get back into the market, in which case maybe we might see the market sink back down into this region. But until then, it seems as if the medium term oil is looking a little bit more bullish. To finish off, we've got copper, which again, there's been another structure in there that we've kind of been following for the last couple of weeks. Again, we've mentioned this inverse head and shoulders. So, across the spectrum, we've seen some bullish price action. We've broken that neckline, had a very big to the upside. We've held this bid at least closed above this really key support region, and now we've got an inside week. I'd be keeping an eye on this, because if we break this inside week to the upside with this impetus move to the upside already, I'd be suspecting we'll probably hit that target of the inverse head and shoulders at around 234 to 235 region. So just keep an eye on that structure. Obviously, that gets nullified once we break this to the downside, but I would still be cautious for trying to play this too much to the downside unless we break this neckline, in which case if we break the neckline, then we might start looking medium-term bearish again. So that's pretty much what we wanted to cover in this week's weekly trading roadmap. Pretty big week ahead. Guys, please try and stay focused. If you've had a bad run, try and reformulate your thoughts. Give yourself a couple of targets. Understand what you want to achieve this week, and debrief yourself daily. If you've been doing well, document what you've been doing well. Understand what it is that's making you, capitalize on your edge, and keep doing that thing day in and day out. And hopefully we'll have a profitable week this week. So thank you guys very much for listening, and we'll speak soon. Bye-bye for now.